Hey, hey, happy Tuesday and happy June 2nd. Welcome back. I'm so glad you are here tonight. Okay, so real quick before we get into it, do you know what today is? Not our anniversary, but we are in the last month of the second quarter and Q2 is almost over. June 30th is 28 days away. And listen, I need you to hold on to these numbers tonight, okay? 212 days until December 31st. That's when your tax year closes. 317 days until April 15th, 2027. That's when your taxes are actually due. I know that sounds like forever. It's not. It goes so fast. Like I feel like I just did my daughter's birthdays and now it's almost July. That's how fast time moves, okay? And that's exactly why we're talking about this tonight. We're getting into the financial mistakes that sneak up on you all year long and you don't even notice them until tax season slaps you in the face with them, right? And here's the thing, they're not big, obvious mistakes. They're the little things, the small stuff. That's like a missed transaction here, a wrong category here, an account you forgot to check or forgot to even include into your books. Doesn't seem like a big deal in the moment, but over time it adds up, right? If you're here tonight, drop a hand wave in the comments so I know who's with me. And if you know another business owner who needs to hear this, share it with them right now. Like right now, like legitly. Like share it right now. So, why small matters, why small errors matter? Oh gosh. So the biggest thing I hear all the time, it's just a small mistake. It's not a big deal, right? And I get it. In the moment, it really doesn't feel like a big deal. Doesn't, right? But bookkeeping doesn't work like that. It builds on itself. One small mistake in January, another one in February, another one in March. By the time you get to tax season, you're looking at a whole mess and you don't even know where it started, right? And it affects everything. Your reports, your deductions, your cash flow, the decisions you're making for your business. Like you might be making decisions based on numbers that aren't even right. That's the scary part, like super scary. And we still have 212 days before December 31st, and that's enough time to fix it. But you have to actually look at it. If you ever got into tax time and thought, how did this happen? Drop a little like emoji in the comments. You're not alone, I promise, right? You're definitely not alone. Build, there's common financial mistakes that quietly build up. And okay, let's just really get into that because this is the good part. Number one, incorrect categorizing. This is probably the one I see the most. An expense goes in the wrong category, income gets recorded wrong. In the moment, you're like, okay, whatever, I'll fix it later. And then you never do. And then your reports are off and you're missing deductions and you didn't even know you didn't even know you had. So that's number one. Number two is not reconciling your accounts. Listen, if you're not reconciling your account regularly, things are getting missed, duplicated, duplicated transaction, missing expenses, wrong balances. And by the time tax season comes, untangling all of that is a nightmare. It's just a nightmare. You're doing that, and plus, you got to pay Uncle Sam. So number three will be mixing personal and business expenses. I know. This one is so easy to do, especially when you're running a business and life is busy, and you just grab whatever card is in your hand. But it creates so much confusion. It makes it really hard to track what's actually a business expense, and it causes problems when it's time to file, right? So number 4, forget the small stuff. This one hurts because it's money you could have kept. Your subscriptions, mileage, software, those little online tools you pay for every month, they feel small, but they add up over the year. And if you're not tracking them, you're just leaving deductions on the table, right? And you know what's like the most common deduction? Like, say you have a bank account and you're not like using a credit union, or you're not using like Relay Bank or whatever. So, like I was basically, that's what I was basically saying. It's like, I totally forgot what I was saying. Ooh. Um, But like I said, like subscription costs do add up. But like the most common thing, like most of the time, like I would look at a client's, like say my client gives me their own expenses, like they list all the expenses throughout the year or whatever, and like they're not using, like I said, Relay Bank or a credit union, like all the banks that don't charge you bank fees or whatever. I would notice that I never see a bank fee. Like if they're like banking with like TD or Chase or whatever, and we know they didn't hit the income. Like we just know certain things, but I guarantee I'd be like, okay, so I didn't see your bank fees. Like I didn't see 12.95 for bank fees. And then it's like, don't even be one of those people that have overdrafts. I didn't see your $35 overdraft fee. So like I would go back to that client, like, so did you get any bank fees? And all of a sudden, out of nowhere, we have tons of bank fees that are adding up. So that $10 or $12 at so like say they're paying $10, that's $120 a deduction that we were about to lose. Then come to find out, oh, they had overdraft, that's another $35. And then to come to find out they had like interest expenses on like their credit card, like some interest expenses you can, under a business you can like file. So there's things that are being missed that you're not calculating because you're not doing your books. Okay. So that's what it is. So, like I said, leave a deduction on the table. So drop in the comments if any of these sound familiar. Seriously, no judgment. This is literally why we're here, right? This is definitely why we're here. Okay, so let's just move right along. So now let me tell you what these small mistakes actually cost you. Let's go into the money part, because this is where it gets real, like for real. These little bookkeeping things can lead to overpaying your taxes, lots of bread, missing deductions that were rightfully yours, inaccurate reports, late filings, which leads to penalties, paying way more for cleanup later than you would have for maintenance. And the thing that gets me every time is most of this is definitely preventable. Okay? Preventable is the cure. We are at the end of Q2 right now. That means you have 2 full quarters of information behind you. If something has been off since January, that's 6 months. 6 months. So you still have 212 days before the year closes. That is time to fix it. But you can't fix what you don't look at. If you want to stop getting surprised at tax time, follow me. I'm here every Tuesday talking about exactly this stuff. Like, come on, bro, get it together. So, prevention is so much easier than cleanup. This is my thing. This is what I preach all the time. It's so much easier, and so much cheaper to maintain your books throughout the year than to clean up a whole year's worth of mistakes at the end. At the end, right? It really just comes down to some simple habits. Okay, reconcile every month, review your expenses regularly, keep your receipts organized, check your reports consistently, keep your business and personal spending separate. That's it. It's not complicated, right? It just has to be consistent, because I don't want you in December scrambling to clean up 12 months of stuff before the clock hits midnight on the 31st, right? I don't want that for you. You have 212 days. Start now. Drop books in the comments if you're ready to get this cleaned up. I got you, right? And like at the end of the day, bookkeeping is really about knowing what's going on at the end of the day. Good bookkeeping isn't just about staying out of trouble with the IRS. It's about knowing what's actually happening in your business, right? Catching the little things before they turn into big things. Because by the time tax season gets here, fixing months of mistakes is just so much harder than it had to be. Here's where we are right now. 212 days until tax year closes on December 31st. 317 days until your return is due on April 15th, 2027. That window is opening right now. Don't wait until it's almost closed. So that means you have 212 times to get your books fixed before the end of the year. If you've been putting off your books, this is your sign. The link to book a call with me is in my bio. So let's get it together. Okay? Before we hop into that, like at the end of the day, it's about preventing, it's about being on top of your things. I know the rate that we charge for like bookkeeping services, like when you are doing what you have to do for your business, like for instance, if I was to take a look at how much I'm charging my clients for like even CFO services, it's legitly like a penny to a dollar to what they're making or whatever. But at the end of the day, it's probably not going to be for everyone, especially like if you're a small business and this might be a lot more money for the services that we provide. But the goal is to make it where it gets to look, it gets to like every penny to a dollar I'm paying for these accounting services, or the penny to the dollar. Like you want it to be like a penny. Like it's like 1% to my client's revenue. Like it's not gonna be crazy. It's the first one's investment. But at the end of the day, if I took a look and looked at all my clients that I'm charging right now, I know they're paying me less than 50 cents or 10 cents per every dollar they're bringing in revenue. So that's the goal. Like the goal is to make sure that you are getting your books in order, and it's getting to the point where you're not even spending that much money to do this. You want it to be as minimal as possible, right? And avoid those costs. Like if it's going to cost you only like a penny, say you're making millions, it's only gonna cost you a penny to get your accounting services in order, like to get your bookkeeping in order, to get your accounting system in order, to build your whatever you need to. Like for us, we are like a whole bookkeeping department in one. Once you become like a CFO, and it's only gonna cost you a penny for all that to your millions, it's common sense, right? And we're saving you from getting penalties or anything like that. We're helping you make better decisions. It's a no-brainer, people. It's a no-brainer. But let's hop into like the questions I get all the time. I get these questions so much, so let me just answer them right here, right now. So the question is, what's the most common bookkeeping mistake I see? And like I said, honestly, incorrect categorizing in accounts that never get reconciled. Those two things are everywhere, and most people don't realize how much it's affecting their numbers until they're ready. Until like they're already deep into tax season, wondering why nothing is adding up. It's not making sense, okay? How often should I be reviewing my books? Every month, every single month. I know life is busy. Trust me, I have lots of kids, 4 kids, 16, 10, 4, and 3. But a month review is what keeps the small stuff from becoming a big thing. And since we're literally wrapping up Q2 right now, this is the perfect time to sit down and do a mid-year check if you haven't done one yet. Okay. So let's go. What's the next question? Can small mistakes really affect my taxes that much? Yes, 100%. Small mistakes that happen over and over throughout the year turn into missed deductions, overstated income, wrong filings, and sometimes penalty. It sneaks up on you. It sneaks up on you. And that's why I keep saying, with 212 days still left before December 31st, there's still time, but you have to start now, right? So drop your questions below. I read every single one. And if you're ready to stop guessing and actually know what's going on in your books, the link to work with me is in my bio. You can hop on my website or whatever. So here's what I want you to walk away with tonight. Small bookkeeping mistakes don't stay small. They never do. They grow. We're at the end of Q2. This is literally the perfect time for a check-in. 212 days until December 31st, 317 days until April 15, 2027. 2027. You still have time, but it moves fast. It's against us, y'all. It's against us. Trust me. I just moved and my daughter is already finished up the school year. The school year's over. So don't let tax season be the first time you find out something was wrong all year. Thank you so much for being here tonight. I appreciate every one of you. So drop an emoji if this was helpful. Share it with someone who needs it. And I will see you right back here next week, Tuesday at 7. Let me see if I know what we're talking about next week. I think we're talking about why you keep falling behind. Yeah, I think next week is why you keep falling behind your books and how to catch up. So that's next week's topic. So I'll see you guys all next week. And I can't wait. Enjoy. For all my Southerners that already have the kids out of school, enjoy little babies and everything. And everyone have a profitable, productive week. Profitable, and make sure it's purposeful. Like at the end of the day, I don't know what you're going through, but we all are here for a purpose. So just make sure whatever you do is productive, purposeful, and profitable. Let's make this bread, bro. Bye.